All right, ladies and gentlemen, I hope you had a wonderful day. It was a pretty ugly start to the week. The good news is that we could confidently say why it went down today, and now we know what to look for. But fact of the matter is, volatility is definitely back in the market. And now here's the kicker. People already know about it. This time around, people have actually bought puts. So some of the other times where we've gotten volatility in the market, the put to call ratio is like near all-time lows. But now we're still pretty high up. You have people positioning for it. We could talk about it, but I do want you to realize where you are at and just don't have short-term memory because we started off the year pretty low. So we got a lot to talk about. I'm going to recap what happened today, exactly what you need to be looking for tomorrow, as we will be getting some data. Then I have a couple of plays that I think will be important. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stack Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farming never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, before we talk about this short-term volatility, which I do think you need to be on the lookout for, you have to pay attention to the major macro shifts. That has to do with rate cuts, even rate hikes. That's all related to the economy and inflation, and then whatever happens with growth. Although we are going through this back and forth, remember, it was just a couple of days ago you were hitting all-time highs. And why I'm saying this, you need to understand where we started from. Even at the beginning of this year, we were as low as 575. Pretty much 100 days ago, you were near 560. You start to pull out this chart, you will realize we are still very elevated even this year. We've already had a lot of pops and drops, big move, big gap down, go back up, move down 3%, climb up, and now we are having this sell-off. So there is a couple of points that you got to be on the lookout for, but what I want you to realize is that you can move all the way down to 575, even a little bit lower. That'll be just around 7 to 10%, and you will still be near, at one point, was an all-time high, the election level and the recent range that we have been in. So, like I'm saying, we may get short-term volatility. Maybe we get another one of these moments, but if you really want the trend and there to be a big shift, you got to pay attention to the macro, and that has to do with Fed policy, whether or not they raise the rates because inflation comes back or they lower it. And although you may not believe that right now, we're going to talk about that in the theme of today. That's going to be a big deal. Again, whatever happens to the economy, prices, inflation, all of that. And then now growth, that's going to be the thing. So hopefully you understand the rage, but now I can't hold it in. So what happened today? Why did we go down? This is going to relate to tomorrow, and I pretty much have it over here too, but the growth scare is coming back, and this is going to be very important because why are we going down? Why is the market selling? I said this on Friday because we did have bad data. The bonds loved it, and I was saying it's weird because this time around the market's not yelling recession because things have been good. Well, fast forward to today, there was still more data. The way things are playing out, essentially, the market's getting worried about the data coming in soft. So you should pay attention. This is a very interesting development. As we've started the year, everybody's worried about tariffs, inflation. The last couple of days with some of the data, you know how people talking about, wait, what happens if growth slows down? What happens if the consumer slows down? What happens if people do get fired from these jobs in Washington? Is that going to lead to a tighter labor market, or is that going to slow things down? Now people are talking about the growth scare. So this is why it's important now leading into tomorrow. Even the rest of the week, we are going to get the PCE. Really, this week is going to boil down to NVIDIA earnings on Wednesday, but tomorrow, be on the lookout. There's like consumer confidence, the Conference Board of Consumer Confidence. It's another metric there. You're going to get stuff related to real estate, house prices, even the Richmond Fed. You are going to hear from the Fed speakers, but be on the lookout. If we get bad data, If that helps out the bond, sure, but see if that starts to hurt the market even more and vice versa. If the data comes in good, see what that does to bonds, but ultimately see if that eases up the pressure there on equities. And then with the Fed speaker, hear me out. Goolsby, there were some comments after the bell today. He didn't say much, but see if any of them shift tone. They probably shouldn't, but if any of them were fear-mongering about tariffs and now kind of the way the growth thing is playing out, see if anybody wants to pivot at the last second. But other than that, be on the lookout for data. Bad news might be bad news. If we get bad data, that's going to add to some of these fears. It will help out the bonds, but now we'll see how the market juggles it. And now here's the deal. If you are thinking, you're like, wait a minute, how are we worried about tariffs and inflation and then worried about growth at the same time? There is a word for that. Post it in the comments. Let's see if you guys know. But that is key number 2, the final key, man. Just in general, again, with this volatility, I think be on the lookout. See if we do one of these, 3 to 5% moves, and then the earnings come in or whatever, and then we stabilize and play the back and forth in the range. Otherwise, you should be worried if we drop 10%. Anything other than that, I really wouldn't trip out because there has still been a big rotation going on. So again, even for the long term, I believe there's a lot of great opportunities. You don't go for the names at all-time highs. You go for the value names. And if you haven't noticed, a lot of those names have been bought up here at the beginning of the year. That's even partly why our long-term has been outperforming. But even in the process of the last couple days, even just this big sell-off, there's been a lot of value names that have been getting a bid. That changed a little bit towards the end of today, but this is still something where you are not getting a totally risk-off environment. Yeah, people are selling one part. There is higher weighting on certain names, but it's not like that money's disappearing again. It's not even like the dollar has even made aggressive moves. People are moving that money to other places. So keep that in mind. Again, even then, it's not like the dollar's surging and people are going to cash. That money is moving around. So be on the lookout for that. All in all, I think we're going to get some good back and forth. There will be good opportunities. See what the earnings does, and ultimately we'll get a little mini test with the data tomorrow and see if that adds to the pressure or not. But now let us get into the plays. So right off the bat, I don't know if you're going to like this. Like I showed you, people are already buying puts. And now here's another interesting, pretty picture. The SKEW index out of the money puts, people are starting to gobble those up as well, and we're barely moving. So it's kind of interesting how this is all playing out, but I did make a play on Friday, and I was watching these plays, and quite simply, far out of the money puts on the SPY all the way out to like March 7th, March 21st, they are cheaper than they were on Friday. This little gap up and then close near the lows, people are worried. We haven't really advanced too much, but these plays are a lot cheaper. And what I would be looking out for, if we do get that 5% drawdown, these plays are probably going to be moving. I already have one set. I'm going to be looking out for them, but the whole idea is if there's a bad NVIDIA earnings or data falls off a cliff, I think you'll get a little bit of a pop if we start to get more of that downside move. You make them free because they're so cheap, and then you're able to ride free insurance on low probability plays. But the part that's weird, there's been a lot of great put plays, and even the last couple of like flash crashes, even in August and some of the other events, but this time around, people are positioned more. So we'll see how it comes into play, but I am still kind of biased towards the range. So get ready to dabble in both ways and always keep it small. But that's going to be a play I'm going to be watching for this week, especially if we get more volatility. That is play number 1. Then play number 2, Dollar Tree. This is the one that I made a play on today, but I'd also watch Dollar General. We caught Dollar General moving early today. Some of you made a move on that, but essentially there was headlines last week about Sycamore wanting to buy a portion of Family Dollar or something like that. And then there was headlines today about Sycamore, this PE fund, getting a loan for $10 billion. They said it was for Walgreens, but I'm just going to keep Dollar Tree in mind because they were in some of those headlines. Thought I'd make a play on there. Kept it small. Again, they were like 5 cents. So going to see how that one plays out. And then again, buyouts, M&A activity. If we get volatility, those will always do their own thing. And then finally, the last play here is Palantir and LMT, even RTX, and just be on the lookout. Macron was talking about defense cuts even today. Macron kind of switched attitude. It seems like they want to have a plan where Ukraine accepts to peace, and then they put NATO soldiers, American and all sorts of soldiers, in these various locations, even in Ukraine, to protect it. And it seems like the EU might like it. At least Macron sounded like he liked it. Macron, croissant. He sounded like he liked it today. So we'll see if that happens. But if you start hearing a peace deal, that's less military spending for them. They're not going to ramp it up. And then also watch out for some of the budget cut stuff. But a couple of headlines after the bell, it started to move those. See if we get a round 2 in the next couple of weeks. But other than that, I'm still playing some of those tech plays. They got kind of clapped, but I do think NVIDIA could either make or break it all. So we'll see. I did make a flip on the bonds today. If you remember on Friday, I was telling you how bonds, if we did get real volatility, besides some of the puts, it would probably be the bonds. They were down today. I grabbed them in the morning. They went up like 80%, I think, or 70, and then I made them free, and now I got a free set, keeping it small. And then other than that, we'll see where tomorrow takes us. But Chad, I hope you're ready for all of it. Don't forget, it's only been like 30-something days of the presidency. It is almost March, but lock in and get ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember eternity has just now entered into the present. There's the beauty of the present. Do not ever delay anything you could do right now. There's no in the future. All vices are rooted in the future. Do it now. You could do it right now, baby. So lock in. God bless you, Chad. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you when the AM end. Horna.